Hello everyone, my name is Pradeep Pandey. I will be presenting you what is venture capital. So let's have a look on it. Venture capital is a growing business of recent origin in the area of industrial financing in India. So what is the concept of venture capital is in a narrow sense if you see it refers to investment in new and tried enterprises that are lacking a stable record of growth. If you see in a broad sense, it refers to the commitment of capital as shareholding for the formulation and setting up of small firms specializing in new ideas or new technologies. What is meaning? Meaning of venture capital is long-term risk capital to finance high technology projects which involves risk but at the same time has strong potential for growth. Venture capitalists pool their resources including managerial abilities to assist new entrepreneurs in the early year of project. Once the project reaches the stage of profitability, they sell their equities holdings at high premium. So let's see now a definition of venture capital. A venture capital company is defined as a financial institution which joins an entrepreneur as a co-promoter in a project and shares the risk and rewards of the enterprise. Here are some of the features of venture capital. Venture capital usually in the form of an equity participation. It may also take the form of convertible debt or long-term loan. Investment is only made in high risk but high growth potential project. Venture capital is also only for commercialization of new ideas or new technologies. Venture capital joins the entrepreneur as a co-promoter in projects and share the risk and reward of the enterprise, as we have seen in the meaning of venture capital. Uh, there is a continuous involvement in business after making an investment by the investors. What are the scope in a venture capital? Venture capital may take various form at different stages of the project. The various stages in the financing of new venture capitals are like development of an idea, seed finance. In in the initial stage, venture capitalists provide seed capital for translating an idea into business positioning. At the stage investigation, it may made in depth and take a year or it may take more days. So here are some of the methods of venture capitals available in four forms in India. If you see, the following are equity participations, conventional loan, conditional loan, and the last one is income loans. So let we see one by one. First of all, we can take equity participation. Venture capital firms participates in equity through direct purchase of share, but their stake does not exceed 49%. Uh, and these shares are retained by them till the assisted projects make profit. These shares are sold either to the promoter at a negotiated price under the buyback agreement or to the public in the secondary market profit. What is conventional loan? Under this form of assistance, a lower fixed rate of interest is charged till the assisted units become commercially operational, after which the loans carries normal or higher rate of interest. The loan has to be repaid according to a predetermined schedule of repayment as per terms of loan agreement. And this one is conditional loan. Under this form of finance, an interest-free loan is provided during the implementation period, but it has to pay royalty on sales. The loan has to be repaid according to a predetermined schedule as soon as the company is able to generate sales and income. And the last one is income notes. It is the combination of conventional and conditional loan, but both interest and royalty are payable at much lower rate than in case of conditional loan. At present, several venture capital firms are incorporated in India, and they are promoted either by all Indian financial institutions like IDBI, ICICI, IFCI, state level financial institutions, public sector bank, or promoted by foreign banks, private sectors, or financial institutions like Indus Capital funds. Thank you. So this was my presentation on venture capital.